Alright, so we're back with our Ask PropertyLimBrothers series. Sorry that we took a break for about 2 weeks. If you have seen our Tuesdays Investors series, it was basically because we went to KL for a seminar, and at the same time we were also busy with our shifting to this new place. We hope that from now on we'll resume the weekly episodes. Alright, let's go! Alright, so we have a question coming in from one of our audience, Ernest, and he's asking this very generic question, but also a very important question, which is how is the market doing now? Because I think he's planning to buy a property in Singapore. I think this question is very popular because everybody would like to ask, how's the market doing now? How's the market doing this year? Should I buy now or should I wait later? What if I buy now? Would the price drop or would the price increase and stuff like that? So I think it's a very generic but important question that everybody would like to be answered. So maybe just to share our experience based on our personal opinion, for the past 13 years, we have seen two major events. But since that two major events, Singapore is now on probably a very different trajectory. So that two events was when I first entered the market. That was in 2006, 2007 as a real estate agent, and there was this subprime crisis, and that was basically like quite bad. And the next event that I actually witnessed myself was in the 2008 October season, where Lehman Brothers took a hit on the market. So ever since then, we have noticed that the market has sort of behaved very differently. I think is because of these several factors that we're going to share with you now. Alright, so I think to show you, it will be better for us to bring out this graph that shows all the cooling measures that has been in place since the year 2010 up to date. You can see that on this graph there's like a lot of lines in between, and all these lines are basically the introduction of the seller stamp duty, the loan to value ratio, the ABSD, the TDSR, the MSR limit for ECs and HDB flats, and this measure somehow all kick in since year 2010, and there has been many different revisions along the way. We think that it plays a very strong impact on the market in the way that it stabilizes the private property market in Singapore. So I think Singapore is really different because property is of course a large factor due to demand and supply. I think that right now we're on a very stable route in terms of the pricing mechanism. And so to answer this question, how is the market doing now and whether should I enter the market, let's have a look at these current few factors. Okay, so Singapore is different. We're a small city country. Our land is just scarce and limited. But at the same time, because of our limited land, the population is also increasing according to the white paper that our government has actually published a couple of years back. So actually, if you were to look at the population increment, it is actually on its route towards the 6.9 million mark. So every year there's like an increment year by year. Based on this small little land, small little city in Singapore with population increasing, what would then be the future of the property prices in Singapore? But at the same time, I think we're really different because our government is stable. We have a good government. At the same time, our economy is stable. We are very open to foreign MNCs, companies, investment. As you can see in the recent years, huge companies are coming in. Of course, this has started many years ago. It's still happening right now. So the perception from foreign investors, foreign buyers is that Singapore is a relatively safe country. It's safe for them to invest in Singapore, invest in businesses, invest in the properties here. But one key reason we realize from our foreign clients is that our currency is strong. So when our currency is strong relatively to Southeast Asia, to other parts of the world, when you put your money here in a property, and of course if your own country's currency depreciates in comparison to the Singapore currency, then naturally you not only ride on the property market prices, you also ride on the currency increment as well. So I think that is one of the key reasons why foreign investors still prefer to put in their money right here. And of course, because of this factor, now the ABSD, which is the additional buyer stamp duty for foreigners, is at 20%. So there's a reason why the government put in this measure, is because of the foreign funds that are coming in by foreign buyers to buy property in Singapore. So apart from the currency being strong, I think our economy is relatively stable. Although there are turmoils around the world, there's trade wars going now in US, China, but economy is still relatively stable right here. Most of the people in Singapore have jobs, stable jobs, and everybody have homes. And there is also one mechanism, the wave of buyers that is actually supporting the private property market is actually from the BTO market, and of course the HDB resale market. So when Singaporeans get married, they own their first BTO. Usually after 5 years, when they exit the BTO and sell it to the resale market, they will definitely make a margin in a sense because BTO are subsidized flats. Now at the same time, of course, if they buy resale properties and they get a huge grant from the resale grant, when they exit 5 years later, they will also have substantial savings from the grant and and the margin and the amount that they're paid off over 5 years. The HDB market is also another mechanism that's fueling the HDB upgraders towards the private property market. So there's multiple prong factors that actually supports the private property market in a sense. And of course, our master plan is also strong because it's always being revamped and improved every 4 to 5 years. There are new areas that's being transformed, like example, the recent announcement of Greater Southern Waterfront and stuff like that. So it's always ongoing, which then makes our connectivity and network to be strong as well, because as you can see, the government is always pumping money to ensure that most places have now their MRT stations, and the latest announcement of the new Cross Island line, which will be done in year 2029, 2030. So I think connectivity network would then boost the general outlook of the landscape in terms of the property prices as well. So of course, if you have watched our previous episode where we actually talk about opportunity cost and why is opportunity cost a huge factor in deciding whether should you buy now or buy later, the key reason is because our age and our income ability comes into play. Alright, so if you will look at the amount of loan tenure that you can get, I mean the base loan tenure is up to age 65, which means that the older you enter to buy a property, the shorter your loan tenure, the higher installments. As we age, probably you want to take a break like when you're nearing towards 50s and stuff like that. So of course your income ability, sometimes it might be affected as well. So it's important to own a property if you are a working professional, if you're young, and that is basically one of the key consideration factors other than the other economic factors or the demand and supply factors. So also take into consideration how long is the loan tenure, what is your income ability, and what can you afford right now in terms of the down payment and stuff like that. I think we have noticed one thing is that ever since the introduction of all these cooling measures, the behavior of the current sellers is also different. So for example, during the introduction of the additional buyer stamp duty for foreigners, a lot of our foreign sellers, as in foreigners who have owned properties in Singapore and probably 2 to 3 properties, their stand is that they will not sell the property. They will just hold it because anyway they have the holding power and they have properties in District 9, 10, 11, the higher tier properties. They won't sell, and they won't sell cheap as well, because the moment they sell, they can't buy back, because the moment they buy back, they'll be hit by the additional buyer stamp duty, which is like 15-20% at the point in time. So people with holding power, they hold on to their properties if there's no urgent need to sell. But of course, there are people who need to sell their properties when, of course, for example, if they lost their jobs, the business are suffering, or they need to extract the funds for various business reasons and stuff like that. So there are, of course, like a minute amount of these cases, which is why there are people who put up their properties in auction and stuff like that. But in the general sense, because Singapore home ownership rate is also very high, a lot of people, they have 1 property or 2 property, and people with 1 property, they basically buy for their own stay. The kids are studying around the area, they own a private property, they enjoy the property, both parents are working. There's really no need for them to sell at a very, very low and depressed price. They can just enjoy the property. I think Singapore is really different. There's so many different factors that hold our prices, and I think that because we are different, the prices right now are stable, and because of the fact that there are this whole route of cooling measures as well, this is just like barricades that is holding a raging bull. If I want to give you an analogy, the moment if let's say external worldwide economic factors happens, and if there's a need for the government to release some of these barricades, to release some of these cooling measures in order to make the prices stable again so that it don't hurt the general market, then I think the government can do so. So basically, because of the fact that we also have all these cooling measures that's already installed into the whole price index, it allows right now our government to do a lot of different stuff. They can actually release it if there's a sudden glitch in the market, and I think very likely the direction is to keep the property market healthy and stable so that it allows Singaporeans and of course PRs and foreigners to enter the market as well at a more stable rate rather than having it escalating in an uncontrolled manner. So this time around, it seems that for the past couple of years, the behavior of the prices has been pretty stable in a sense. So the very last thing for you to consider is that you can also watch back our previous episode where we talk about prudency, not to overcommit, and of course to do your sums correctly, look at the opportunity cost on when you should enter. So of course it's better to enter young when you have the ability, but importantly is to do the homework so that you know which particular project to select, which is a particular type of properties to select, and every project behaves differently, so there's a lot of different mechanisms in itself. Alright, so of course lastly, if you need a consultation appointment with our investment team, you can click on the link right down below to have a coffee session with us, and we'll be happy to share with you more over the one-to-one session. Alright, so we'll see you soon. Cheers.